Hello. So, is it a buyer's or a seller's market right now? That seems to be the question of the year. So, have you been waiting to see if and when the market is going to shift? Well, the timing might be right now. Hello, I'm Tracey Pines with Real Estate Solutions, and I help buyers and sellers in the Tampa Bay area. Today, I'm going to go over 3 of the most important topics happening right now in our housing market. We are going to go over mortgage rate projections and home prices, something that seems to be on the top of everybody's mind right now, and what's happening right now in the Tampa Bay area. Also, if you are a buyer and you have put your home search on pause, I have 3 options that you can think about that might help you get back into the home buying market. I'm going to begin today with mortgage rate projections from the experts. And this year in the housing market, it has truly been defined by rising mortgage rates. This is a look at the Freddie Mac 30-year fixed rate going all the way back to January of 2022. What this graph shows is how much mortgage rates really rose from the beginning of the year all the way back into mid to late June. And since then, you can see that there's been a lot of volatility or fluctuation in the mortgage rates over the past few months. So why is that? Well, you may have heard that inflation is the enemy of long-term interest rates, and that's certainly something that we are watching right now. We know that the Federal Reserve doesn't call mortgage rates, but they're certainly making the moves right now to ease inflation. And when that happens, mortgage rates respond. So we're watching all of the different economic factors that impact mortgage rates and how that's playing out over time. So what are the projections going forward? Everyone wants to know, where are the mortgage rates headed this year? I really wish I had that crystal ball, but I'm going to have to read from the experts today. So if you look at these projections from Freddie Mac, Fannie Mae, MBA, and NAR, these are the latest data we have as of August of this year. And if we average all of their projections together over the next 4 quarters, what we can see over in the right-hand column is that mortgage rates are projected to essentially stabilize over the next year. So when we are really trying to figure out what's going to happen with mortgage rates, this is a great place to look for information. And maybe a nod to the experts feeling that the Federal Reserve is going to get inflation under control. If that's the case, then mortgage rates could stabilize at this point. That's certainly what we're looking forward to, and hope that the experts are correct in these projections as we continue to watch all of the economic drivers around us. And I think as we look at this, low to mid 5s is the projection, maybe even by next year at this time, dipping into the high 4% range. And that could bring a lot of predictability for buyers. And I think that this next quote really says that well. This is from Lisa Sturdivant, a housing market economist that I like to follow. And she says, after the end of the summer lull and as mortgage rates stabilize, we may see a return of buyers in a relatively strong fall housing market. So that could be great news. If mortgage rates do stabilize, we may see more buyers coming back into the market. We certainly know that rising mortgage rates have caused many buyers to step out of the home buying or selling process. But with these projections at hand, we could see a very strong fall housing market. So another topic that's on everybody's mind is home price appreciation. This is the number one question that my buyers and sellers are asking me right now. I'm going to do my best to explain home price appreciation, because what we're hearing right now is home prices are depreciating, but we're really talking about deceleration. And then in some markets, we are seeing sellers bringing their list prices down. So what we're going to start with is this quote from Mark Zandi, chief economist at Moody's Analytics. And he says, I don't think national housing prices will decline in a meaningful way, but there will be some price declines across the country. So what does that mean? Well, on average, nationally, we project that home prices will continue to rise. But at the same time, we also know that there are some overheated markets throughout the country, especially out on the West Coast, where there will likely be some price declines. And we are seeing a little bit of that in the Tampa area. So we want to bring some context to this to show you how home price appreciation is still expected going forward based on today's buyer demand and low inventory. But what does that mean in the grand scheme of things? I think this chart really helps to articulate this. This says the appreciation is slowing, not depreciating, and that's where deceleration comes into play. So let me walk you through this. This is a percent year over year of home price increases for 2022 so far. And this is data from CoreLogic. This is the latest data released. And so what you can see here is that year over year, January, February, and March, home prices are still accelerating at a pretty rapid pace, record-breaking home price appreciation at the beginning of this year. But what has happened since then? We've come off that high of 20% year over year home price appreciation, and it's starting to cool. And that's why you can see in May, June, and July, that's the deceleration in prices. So what this means is year over year, let's say July of this year compared to July of last year, home prices were still 15.8% higher on the national average compared to last year, but that's a slower pace than that high of over 20% that we saw at the beginning of the year and end of last year. So the pace of appreciation is slowing. That's deceleration. It's not depreciation where we would have a negative price. So if you're a seller today, there are still plenty of buyers out there and the inventory is still low. We know that prices are going to continue to rise, but at a slower pace. And what this means is that a year ago, the listing price was the floor of a negotiation. You could maybe list your house a little higher than what you thought it was worth, and the buyers would still come in. You would get multiple offers, you would have bidding wars, and the price would be bidded up, etc., right? What's happening now as the market starts to shift is that listing price is probably more of a ceiling of the negotiation. Buyers have a little bit more negotiating power. We're seeing changes month over month, and that's what we're keeping our eyes on. The home price appreciation is slowing, not depreciating on an annual basis. This quote from CoreLogic really helps to articulate that. It says, annual home price growth slowed for the third consecutive month in July, but remained historically elevated at 15.8%. That's the graph that I just showed you. As 30-year fixed-rate mortgages neared 6% this summer, some prospective homebuyers pulled back, helping to ease overheated and unsustainable price growth. We know the past 2 years have been an anomaly. The price growth over the past year in particular was unsustainable price growth. So looking ahead, CoreLogic expects to see more of a balanced housing market with year-over-year appreciation slowing down to 3.8% by July of 2023. So by July of next year, CoreLogic is projecting that homes will still be appreciating in value, but at a much slower pace. That's deceleration continuing, and this is much more in line with what we were seeing from Home Price Expectation Survey and what they are saying for continued price growth. Higher this year and a little bit more towards a normal range next year, beyond. And leading up to the pandemic, the average typical home price appreciation over a typical year was 3.8%. That's what the experts are starting to see as they look forward. However, what I also want to walk you through is many experts raised their home price forecast this year. So this is very typical. What you can see here, these are January forecasts over 2022 home price appreciation. That's what you see in the middle column compared to the latest forecast, and those are in the right-hand column. So what usually happens as you start a calendar year is the experts project out what they think home price appreciation is going to be this year. They're looking at buyer demand, they're looking at supply, inventory, all of the different things that drive home price growth, and they project out for the year. Well, as the year goes by, experts tend to reforecast based on what's actually happening in the market. And so that's what you can see here is that this year, experts, even though prices were decelerating, reprojected a higher home price appreciation for the 2022 calendar year, and that's what you see here. What experts probably thought at the beginning of the year was that we would have more inventory. mortgage rates haven't risen as much as they had to soften buyer demand. And so as the year progressed, they realized inventory is still low and buyer demand is softening. So they reforecast up, and that's what the green column is showing you from each of those experts. What does this look like for 2022? So take a look at this graph on the latest home price projections for the year and the average of all 7 forecasts that we follow is showing 11.3% annual appreciation for 2022. Now, what we have to remember is that the majority of that home price appreciation happened earlier this year, and we're seeing that softening, but experts still are projecting by the end of the year 11.3% home price appreciation for 2022. So why is that? Well, that's because inventory is still historically low. And if we look at this data from calculated risk, this helps us compare at today versus where we were over the past few years. So if you look at that blue bar on the left, you can see that inventory is 26.3% higher than it was the week ending September 2nd of last year. So year over year comparison for the last week of August and into the first couple of days of September, 26.3% more inventory. So that is creating more opportunities for buyers. It has helped with the softening of home prices for sure, but compared to the same week in 2020, inventory is still down 5.4%. And compared to 2019, prior to the pandemic, inventory is still historically low, down 42.2% from where we were that same week in 2019. So that's what's continuing to drive upward pressure on home prices. Inventory is still low. We still have buyers in the market. Yes, we've seen a softening, but home prices are projected to continue rising, primarily based on this inventory data as well. Now, I've given you a lot of information about what's happening throughout the country. So let me show you some information on what's happening in the Tampa Bay area, primarily with Hillsborough, Pasco, and Pinellas counties. This information is from October 2021 to August 2022. And this graph of Hillsborough County shows that the average days on the market is now running 11 days, and the median list price is roughly $390. This next graph shows original prices versus sold prices, and you can see here that the list prices have certainly been going up until July, and the sold prices, which are in blue, are slightly lower. In Pasco County, again, this is through the end of August 2022. The average days on the market is roughly the same at 12 days, with a median list price of $329,693. And again, this is through early September 2022. Pasco County's prices were increasing until August, but in July and September, the sold prices were significantly lower. In Pinellas County, through the end of August 22, the average days on the market is also 12 days with a median list price of $369. And through early September 2022, this graph shows the original price versus sold prices. Prices also kept ticking up until July, with the sold prices slightly less. But look here at the beginning of September, list and sold prices are even. As you can see, the days on the market are longer than the 2, 3, and 4 days, even hours that we have been seeing. And usually when homes are still in the market after 10 days, you start to see price declines. If you're a seller and you've been on the fence as to whether to put your house on the market or not, now should be the time. And if you're a buyer, you can see how the market is starting to shift towards in your favor. So if you're looking to purchase a home, there are 3 things I think you can do right now if you're struggling with affordability. The first thing that you can do is you can expand your search criteria and your search area. Maybe you were looking at buying a home near the city center or in town, or maybe now you can look a little bit further out or look in an area that is more affordable than what you had first originally decided on. That's the first thing. Secondly, you could explore alternative financing options. I'm not telling you to go get in some crazy product. I'm going to encourage you, though, to find a great lender in your area that can help you understand what you qualify for, what products are available in the market, how you can manage the debt based on what we've seen in rising prices and rising interest rates. I think it's critically important to explore alternative financing options. How do you structure that debt? Thing you can do is you can look for grants in your area and gift funds. There are sources like downpaymentresource.com. They're a great organization that you and your realtor or your lender can check out. I hope this information was helpful to you. And if you are looking to buy or sell in the Tampa Bay area, please feel free to reach out to me. Thanks and have a great day.